All right, good evening everybody, and welcome back to Walks on Wall Street. It is Tuesday, February 21st, 2022. I want to welcome everybody back to New York City. We are here reporting live from Billionaires Row, 57th Street on the corner of 6th and a Half Avenue. Guys, talk about a very volatile day in the markets. We are going to cover all of that and more tonight on Walks on Wall Street. But first, let's just do a quick recap of how the major equity indices traded today. If you look at the NASDAQ Composite Index, we were down about 294 points, or about 2.5%. Big red day across the board in the tech sector. The S&P 500, we were also down about 81 points, or roughly 2% on the day. And then lastly, the Dow Jones Industrial Average, or the Dow 30, did also fall 697 points, or just about 2%. Now, if we look at some of the technicals, the Dow has now cracked below its 50-day moving average on pretty significant and heavy volume, so that is something to watch there. If you look at the S&P 500, it looks like we're about to retest that 50-day probably by tomorrow. Now, the 50-day moving average sits at 39.77, but I think the main focus of today, and I think everybody knows before I even say it, is the bond market. Today was a very brutal day in the bond market, significant pan sell-off in the debt market. I want to turn everybody's attention to that U.S. 10-year Treasury yield. Talk about a face rip, blow your face off, rip your face back rally in that 10-year Treasury yield. It looks like we're going to 4%. I think as of trading right now, let's take a look. If you go to cnbc.com/bonds, 10-year Treasury yield is at 3.939%. So we're knocking on the door of 4%, guys, and it's very possible that if we go to 4%, we're probably going to see a 7% 30-year fixed rate mortgage. Now, I would like to just quickly touch on one thing before we head down to street level. I want everybody to think back about 2 or 3 days ago when we were in Miami. Jim Bullard, who is actually one of the Federal Reserve presidents, there was some news that surfaced that he was actually an advocate for a 50 basis point rate hike at the previous FOMC meeting, and that he actually confirmed that in 2 weeks, when we have the March FOMC meeting, he is actually going to advocate for 50 basis points instead of 25. And, futures markets are actually reflecting that now. Take a look at futures. We're pricing in about a 24% probability now of a 50 basis point rate hike. That was in the single digits last week. So markets are moving, and I think that's why we saw this big sell-off in the equity market. You have a pan sell-off in the bond market, yields spiking, putting pressure on equities. Lastly, let's have a look at the dollar or the Dixie. Dixie had a pretty good day today. We are back above 104, and the 200-day moving average on the Dixie is at 106. So if the dollar can get rallying here, if we could have bonds selling off again, yields spiking, I think equities are going to continue to fall under pressure. And then let's check junk bonds, ticker symbol JNK. Talk about a slaughter fest there. Okay, junk bonds really, really taking a beating. As you know, we tend to follow and put a very high emphasis on junk bonds because it is a risk gauge to the market. Okay, if investors are buying up high yield debt, junk bonds, that means there's a little bit of risk appetite there. However, junk bonds sold off with very, very steep ferocity today. The topic for tonight, everybody, the National Association of Realtors has released the existing home sales data, okay? And as you guessed it, and we predicted this on Walks on Wall Street, this is the 12th straight month of declines for existing home sales. All right, let's head out. Let me zip up my backpack here. It's actually a pretty nice night in Manhattan. So warm welcome back to you all, and we will say hello to everybody in the chat. I see Faye Tiggins, my friend British Gray, the ABX girl is here. Welcome, welcome. Danny is here. Richard Vogel, good to see you. Water blazing, as always, thank you so much. Linda Silva, welcome. Grant Stetton, Adrian Palmels, the investigator, British Gray, Gigi NYC, TC. Dr. Longest DM, the one and only Top G is here. God bless you. The investigator, John, Julia M, Christina, Austin City Limits, Susan Wolin. Oh my God, guys, we got a packed house early packed house today. All right, let's head out. This is the miniature office. Let me try to fix the mic. Yeah, Dr. Longest says, I see home prices coming down around in my area. Yeah, we're going to talk about that tonight. Huge housing data we have. Hollywood bond. All righty. Hey, Dan Zhang is here. What's up? DJ Reviewing Under 2 says, what's up, Tom? Back in New York City. It's gonna be cold. Yeah, I mean, here's the crazy thing, right? So welcome everybody to the ground floor. This is on the corner of West 57th Street, 6th and a half Avenue. As you know, this is my favorite place on earth, team. We're outside of 157. Which is my absolute favorite building here on Manhattan's Billionaires Row. It was developed by the Extel Group, and this building is what kicked off the trend, is what we now know as Billionaires Row. If you look to your left, this is Central Park Tower, and the building with the gold top, that is 220 Central Park South. Gorgeous night. Now I will say, what a difference between New York City and Miami. You know, I got in late last night. I got in at about midnight. When I left Fort Lauderdale, so I flew out of Fort Lauderdale this time, it was 85 degrees, okay? 85 degrees and sunny all day. And then when I landed, it was in the high 30s. So definitely a bit of a change. But look, it's good to be back. I'm glad to be back in New York. And hopefully you guys are all happy to be back too. I see Preston is here. Says, wasn't Tom in Miami yesterday? We were in Miami yesterday. Zozo Bob is here. Gary Carpenter. Hollywood Bob, welcome. Good to see you. UniJ23 says hello, Tom and all. Austin City Limits says, yeah, Tom, home sales were down the lowest since 2010. Yeah, so let's talk about that right off the bat, because, you know, we've been following this trend, and it's so important that we not only look at the year-over-year data, but we look at the month-over-month data too, because, you know, we talk about lagging indicators, we talk about leading indicators, but there's also lagging data within the leading indicator reports, right? So in order to catch a trend, I would advise to put more emphasis on the month-over-month data. And home sales, existing home sales, continuously continue to fall off a cliff. We were down 0.7% on a month-over-month basis. And as you guys know, right, it's pretty obvious, we've been covering it here. Now, there's a main factor as to why, right? And we've been talking about how the real estate market is a very, very rate-sensitive market, okay? Real estate is all about interest rates. Real estate is all about debt, all right? So, in layman's terms, what we should be doing, generally speaking, is accumulating and buying real estate, right, on a relative term when rates are elevated, when rates are high, and actually selling into that environment where rates are low, right? We've been talking about, you know, the reason why we had a really banner year as it relates to real estate in 2020 and 2021 is because of this huge injection of liquidity, not only on the federal front, right, from a fiscal policy front, but more so on a monetary policy front, right? Once COVID happened, the Federal Reserve dropped interest rates to near zero. They started a bond buying binge of mortgage-backed securities and U.S. Treasuries, suppressing rates, artificially suppressing rates. Now, chances are, if you bought a home last year, well, you probably got a sub 3% interest rate, or right around 3%. But now, and the 30-year fixed rate mortgage, the rate's actually probably higher than what I'm reporting now, because the 10-year U.S. Treasury yield took a rocket ride today. But according to Bankrate.com, as of the recording this video, the average 30-year fixed rate mortgage is going for about 6.5%. Now, really quick, I want to point out Central Park Tower. But as we're doing that, team, the 10-year U.S. Treasury yield, as of today, is 3.9%. I can almost guarantee it's going to go to 4. If it goes to 4, I would not be surprised that by the end of next week, we could have a significant jump in mortgage interest rates. And I think the average 30-year fixed rate mortgage may be 6.7 to even 7%, depending on the credit risk of the person. So, you know, no surprise that existing home sales continue to decelerate. And we actually got some news on inventory. Inventory is actually picking up. We'll talk about that. Hey, Ariane is here. Says, hello, Tom, from Western Mass. I was in New York City yesterday. I was on the top of the Rock. Hey, dude, that's awesome, man. Now, as you know, the top of the Rock is by far my favorite observation deck in New York, because from the top of the Rock, you could see the Empire State Building. Dan Zhang says, Tom, what year did people start calling this area Billionaires Row? You know, I'm not too sure, Dan, but I think 157 that we just passed is the building that kicked off the entire trend. So I think once that was completed, I think that's what coined the name Billionaires Row. 21 Awesome says, hello, Tom, from Oklahoma City. Good to see everybody in Oklahoma. Welcome to New York. Wanda Powell has said how rentals are skyrocketing in Florida. My daughter's rental apartment increased $900 more, bringing her rent from $500 to $2,400. Wow. Both working parents, is Wanda Powell. You know, Wanda Powell, number one, thank you for that insight. I think that really helps us in the team. But you're 100% correct. And the data actually supports what you're saying. Now, I apologize, everybody. I forgot to give you the Nightbot link. But if you type !NAR, okay, NAR in the chat. I've programmed the Nightbot to drop the actual link to the National Association of Realtors existing home sales report that just came out. So my apologies for that. But to sort of piggyback off of what you were saying about how rents are going to the moon in Southern Florida, well, if you look at the data, right, don't read the CNBC article, don't read the Wall Street Journal article about it, look at the actual report from the National Association of Realtors. And in the existing home sales report, does anybody want to take a wild guess at the only market that actually showed sales increases on a month-over-month basis? Does anybody want to take a wild guess? I'll give you a hint. The East and the Midwest saw month-over-month sales transaction declines, with the South actually seeing an uptick in sales transactions in January. So people moving to Florida, people moving to the South, that market continues to remain white hot. However, inventories are picking up a little bit, guys. Hey, Roberto says rents are higher here in New York than Florida. I think that they're roughly even, but we could say that they're crazy expensive. Doesn't matter if it's New York, doesn't matter if it's Southern Florida. I think we could all agree, guys, rent is crazy. Rent is really expensive, really, really expensive. Hey, Will M is here. Good to see you, Will M. My friend Mets fan 1023 says, Tom, Miami needs more affordable housing and not luxury towers. You know, Mets fan, I would agree with you. And we're starting to see a very similar trend to Mets fans' point take place in Southern Florida and Miami, similar as what's going on right here in New York. You know, you look at all these new developments. This is 220 Central Park South, right here with the gold top. Okay, these are not affordable housing units. These are mega bucks, billionaires row style apartments. And it seems as if the upper echelon, the higher clientele, the nicer buildings, right? You think of 432 Park Avenue, the Steinway building, 157, Central Park Tower, all of the major new developments, the trophy properties, they seem to be doing all right, but it doesn't seem like there's any interest to build or develop affordable housing. Nina is here, says, hey, Tom and team, good to see you, Nina. We are now approaching Columbus Circle. Now, speaking of quite beautiful buildings, if you look directly in front of you, this is the Trump International Hotel and Tower. This is an absolutely gorgeous building. It's actually one of my personal favorites in New York City. But right behind it is another absolutely gorgeous property, okay? It's 15 Central Park West. And this is one of the most exclusive addresses in all of Manhattan. It is right on the northernmost tip of Columbus Circle. And your backyard is Central Park, guys. So you have the best of both worlds, amazing views. The sunsets are absolutely gorgeous. Right here is the Deutsche Bank Towers, formerly known as the Time Warner Center. This is one of my favorite places in the city, as you guys know. Let me catch up on some of the comments here. Hey, the ABX girl says, Tom, I know someone in the luxury auto market, and people are having remorse about $750 to $1,000 per month new auto payments, and they are getting ready to get out of their job, says the ABX girl. Yeah, I mean, I definitely don't doubt you. You know, I think we were talking about that too, where a couple months ago, the average auto payment in the United States for that month was $1,000. Now, I can't even comprehend that, guys, because you know me, I don't drive. But I don't know. I don't get how some of these people are paying $1,000 for their car note. It seems a little bit too crazy for me. But hey, the LT Prods is in Massachusetts. They have a law that if project is 25% affordable housing, they could pass zoning laws. Yeah, I think that's a good idea. Edward Adams is just another rundown of the middle class, the group that could best afford mid-range housing. This is Edward Adams. Bree Grams is here. Good to see you, Bree. Thank you for joining us. Now, let's get down into a little bit of the specifics about the data. We're going to talk about some of the median sales prices that took place in January. But I think the overarching theme is that interest rates are providing significant pressure on sales transactions. But what we're really not seeing is huge price declines, at least not yet. But on a month-over-month basis, we are seeing some cooling, if you will, on prices. Now, chances are, in some select markets, if the piece of property was sitting on the market for more than 30 days, it's probably going to sell for about 10% below asking, right? Now, many people would say, oh my gosh, that seems like Armageddon, that seems so crazy. But you really have to compare it to 2019 levels, because we've had a meteoric rise in the price of real estate, not only here in New York, but pretty much across the entire nation. So to have a home that's selling for 10% below asking, it's not the end of the world. But check this out, guys. On a year-over-year basis, this is when the numbers can get a little bit scary, like the scary headline numbers that we talk about. On a year-over-year basis, existing home sales is down 36.9%, right? Now, that seems like total carnage, and yeah, it technically is, but you have to compare it to the, what I like to call, animal spirits market that we were in last year, right? When it seemed like everybody and their mother was foaming at the mouth to get into a house, right? I call it FOMO. And if you remember correctly, some of these people and some of these buyers were actually getting into bidding wars with one another, paying premiums over the asking price. Now, that is totally out of the market now. Very seldom are you ever going to see these crazy bidding wars. And now that sales transaction volumes are drying up, I think one of our main predictions here in Walks on Wall Street is coming true. And that is that buyers are going to have more negotiating power, more leverage to get a good deal and get a better deal. So if you're a first-time home buyer and you're in the market for buying, this is what I would advise. And this is just my personal opinion. This is the front of the Trump International Hotel and Tower, by the way. Whatever market you're in and whatever market you're looking for, I would rent for 6 months. Let's say if you want to live on the Upper West Side, try to rent for 6 months. Let's say if you want to live in Miami, Florida, try to rent for 6 months. Feel it out, because this is what I like to call a asymmetric risk trade. You have a very asymmetric risk profile setting up here where, you know, if we think about what Jim Bullard says, which was one of the Fed presidents, this is inside Central Park. I'll give you guys a quick view. You know, we may get a 50 basis point rate hike at the next FOMC meeting. If that happens, guys, the Fed funds rate is going to be above 5%, which means the average 30-year fixed rate mortgage will be well above 7% in my opinion. And if that happens, you could pretty much bet that we're probably going to get a 13th month in a row of existing home sales declines. And what you want to do as a buyer is you want to take all the emotion out and use every single thing to your advantage to gain leverage over the seller and get yourself a good deal. So that's what I would say. I'm very optimistic about the housing market for buyers to get good deals over the next 6 to 12 months. But I want to know what you guys think. You guys think we're going to have a cataclysmic meltdown of a 2008 style housing crash, or do you think we're just going to have a mean reversion to 2019 prices? Let me know in the comments. Hey, the LT Prods is Tom. I think the chance is good for 50 basis points again if the non-farm payroll report comes in hot. You know, LT Prod, I think you're correct. And here's something interesting, and I want everybody to take a look at this. Now, again, when we were streaming in Miami, when the news broke that Jim Bullard was actually pushing for the 50 basis point rate hike at the last FOMC meeting, and he confirmed that he is going to push for it again in March, the futures market wasn't even pricing in a 50 basis point rate hike at all. And now we have a 24% probability that the Fed will increase interest rates by 50 basis points at the March FOMC meeting. So we'll keep an eye on it. It's very possible. And if that happens, welcome to 5% Fed funds, my friends. Lost in the Curve says it's all cyclical. Housing will come down. People will stop paying these hysterical prices. It will just take some time. With all the layoffs, prices will have to drop. I generally agree with you. And to back up your point, I would like to direct everybody's attention to, I think it's about a quarter of the way down the page. Is that correct, everybody? Now, once again, if you type exclamation point NAR in the chat, you'll see the existing home sales report. But let's talk about inventory, okay? Because Lost in the Curve is saying, look, it's all cyclical. Housing prices has to come down. Prices are going to come down. It just is going to take some time. Well, one of the main factors that will, in and of itself, bring down housing prices is the onboarding of more supply in the market, right? This is basic economics 101. Really quick, everybody, this is the 220 Central Park South. Look at how gorgeous this looks. Amazing, amazing building. Now, here's the thing. This is a fact. We're starting to have inventory creep up a little bit here. And if you think about inventory on a per month basis, right? So how many months of supply are on the market? Well, I think it's about a quarter of the way down the page. And I think there's about 2.9% or 2.9 months, of supply on the market. So the median existing home sales price, right, so the price that the home sold for, that actually increased 1.3% year over year to $359,000, okay? Now, inventory also grew on a month-over-month basis to 980,000 units. That's about 2.9 months of supply that is now on the market. On a historical basis, to be fair, that's actually low. Okay, it's actually low. You can tell we're back in New York City. We have the homeless people rolling around. But we have about 2.9 months of supply in the market. But the supply doesn't just rush on the market all at once. It starts to happen gradually and gradually and gradually. So maybe Lost in the Curve is correct. If we start to have 4 months of supply on the market, 5 months, 6 months of supply on the market, history shows that could correlate to a nationwide price declines of about 8 to 10%, which I think would actually be healthy for the long-term housing market, in my opinion. Hey, Vinny Castellano, what's up? Good to see you, my friend. Thank you so much for joining us. I think Vinny just recently purchased something in Iowa, didn't you? Here we have 157. And the beautiful New York Athletic Club. Hey, Julia M. says, how does supply come onto the market other than people selling their houses? Well, the only other way would be distressed sales. And I guess on a positive note, right, if you think about the percentage of all existing home sales last month that were made up of distressed sales, and that includes foreclosures, unfortunately people that are delinquent on their mortgage payments eventually go into foreclosure, and those then go back onto the market in the form of foreclosures and short sales, that only represented 1% of all existing home sales last month. So to your point, how do we get more supply in the market? It's either people list their homes to sell or we have distressed sales. And fortunately, we're not really seeing too many distressed sales in the market. Hey, B. Smith is here. Says, hey, Tom and friends. Good to see you, B. Smith. John Bader says, yes, correct. Brian, welcome. Francisco GM, good to see you. Gentle says, I have been watching your streams in the background for a while now and just want to say thank you for the market info and very good content. Well, thank you so much for being here, and thank you for supporting Walks on Wall Street. It really means a lot to us. Will M says, does new construction bring supply onto the market? It does, but that's for new home sales, right? This report that came out today, but it's a really good point, Will M. The report that came out today only is covering existing home sales, right? Which is essentially used homes. So a home that I live in and then I sell to somebody else. It's not like Toll Brothers is building homes and putting supply onto the market. That would be in the new home sales report, which we're actually going to get out later this month. It's a really good point. Let me make sure I'm not missing any comments. Hey, Lena Sandoval is here. Good to see you. Steph UH is Tom, small town, Sebring, Florida. According to my brother, he's a real estate attorney. Prices have mitigated slightly. Market's still pretty robust. Lots of cash buyers. Yeah, Steph UH. It seems like the data we got out today coincides exactly with what your brother is saying, because all of the major markets that the National Association of Realtors covers, every single market suffered sales declines except the South and the Midwest. The East suffered sales declines, but maybe this is seasonal, right? Who really wants to buy a home in the Northeast when it's frozen? People would much rather buy in Southern Florida and in the South. Now, everybody, check out how absolutely gorgeous the ballroom is here at the JW Marriott Essex House. Now, very seldom do they have the drapes pulled across here so the public can see. But this is an absolutely gorgeous hotel. And again, very expensive hotel. This is a 5-star hotel located right here, 59th Street, Central Park South. It's one of my personal favorites. Very conveniently located on the southernmost side of Central Park. And for those of you who don't know, Central Park stretches all the way from 59th Street all the way up to 110th Street Cathedral Parkway. And that would be the start of Harlem. Hey, Michael Welch Jr. says, hey, Tom, long time no talk. What's up, man? Hey, Michael, how was your place in Puerto Rico, right? I think you just bought a place in Puerto Rico, you told us. How's that going, man? And here's the main lobby at the JW Marriott Essex House. So elegant, absolutely beautiful. Now, as you guys know, my favorite thing about this hotel lobby is the gorgeous crown moldings. Look at that. I mean, you're not going to get that anywhere else in the world but here in New York. Hey, Gene Paul is here. Good to see you, Gene Paul. Thank you for joining us. Jacob O'Brien says, hello, Tom. Hope the night is good. We are getting a foot of snow. Oh, my God, dude. I don't know how you guys do it. God bless you, man. I can't do the snow. I'm not a big snow guy. You know, knock on wood, here in New York, we haven't really had any snow. Thank God, but... Michael Welch Jr. says, Tom, Puerto Rico is great, actually. I gave up Whole Foods and decided to do independent work. I'll be back to New York City next week. Hey, dude, awesome. That's fantastic. Good for you. Now, we could probably talk offline if you want, but I'm actually really interested to see how the Puerto Rican housing market is doing, especially from mainland buyers here in the United States. What the demand is like. But congratulations, man. That's awesome. Hey, Little Yell says, Tom, what are some good pizza spots in the East Village? If Prince Street is too crowded. I'm trying to think. Joe and Pat's is good. I think that's on First Avenue. Check it out. Joe and Pat's. If you want to laugh, there's a hysterical pizza review by the company Barstool, I think. So if you want to have a pretty hard hysterical laugh, type in Joe and Pat's pizza review, and You will not be disappointed, let's just say that. Hey, David S. is right on. Wow. Yeah, so David S. is telling us how white hot still the Southern Florida market is. Now, I told you guys when I was down there, I actually attended a couple open houses. So North Miami Beach, it's right near Sunny Isles, and the demand is still pretty crazy there. A 3-bedroom, 1-bathroom house, less than 1,000 square feet, sold for $430. Think about that. Really crazy. And it's probably the demand from the buyers from the Northeast moving down south. Now, I would like to point out to everybody, this is 106 Central Park South. This is actually my old building. I used to live here for about a year, and I could say without a doubt this was my favorite New York City apartment I've ever had, right here. I actually got a pretty good COVID deal when everybody was moving out of the city, panicking about the big C. I was actually moving in, and I lived right here for about a year and a half. Well, a year and a couple months, I should say. And it is gorgeous. The lobby is beautiful. And yeah, I was here in 2020. Well, the tail end of 2020 into 2021. It's a really, really nice place. I actually think there's some studio apartments for rent in this building now for about $3,700, which you would think is pretty expensive, which it is, but during the Big C, I was actually able to get the apartment for just a hair under $2,000. So, team, we are here at Avenue of the Americas. If you look all the way down, you'll see the beautiful One World Trade Center. This is the MoMA Tower, which is actually another flagship building on Billionaires Row, by the way. Hey, TC, this is Tom. Do you mind sharing how much the rent was there? It was just about $2,000, maybe like a little hair under $2,000. But you got to understand, the New York City real estate market went through a mini flash crash during the pandemic. So anybody who moved into the city, you probably got a really good deal. It's either the landlord would pay about 3 to 6 months of your rent, or they would just give you a significant discount altogether. But it was awesome. But TC, it's good to see you here. Thanks for joining. Julia M says, Tom, why do you call it the Big C? Because every time we say the name of it, I get these emails from YouTube, and then the stream gets shadow banned if we say it. So I have to say the Big C. Steph UH says, Tom, the real estate story in Florida, West Coast hit by the hurricane, has yet to be written. Insurance companies are not paying most damages by the flooding. Yeah, I mean, that's another major risk, right, when you move to a very hurricane-prone neighborhood. Now, somebody sent me an email, or they may have made a comment about, my thoughts of, buying property in Southern Florida due to the flood risk. But sort of here's how I think about it, and let me know what you guys think in the comments. But this is how I think about it. Look at this car out here. Anywhere in the United States, if you really think about where the vast majority of people want to live in the United States, it's on the coasts, major cities like New York, like Miami, like Dallas, places like LA, right? And if you notice a common theme about all these places where people want to live, they're very prone to natural disasters. You think about what's going on in California right now with all of the wildfires, right? But California is a gorgeous place. People want to live in LA because it's 70 degrees and sunny all year round. You probably could not get better weather than Southern California, in and around LA, right? You think about New York City and parts surrounding New York, like Nassau County, Suffolk County. Many people don't know this, but since I'm a native Long Islander, I know this. The flood risk is crazy in places like Oceanside, Long Beach, Center Avenue, East Rockaway, Island Park, Oceanside, Long Beach, Massapequa. South Shore Long Island, if there's ever another Hurricane Sandy, good luck. I mean, it's I was there through Sandy helping with some of the cleanup. And it was horrible, right? So look, anywhere there's high demand to live, it's going to be near a major waterway, it's going to be near the coast, or it's going to be someone where it's very prone to fires. That's life. I sort of think about it as that's life. The only thing we could do is just mitigate our risk. Now, it depends if you're a multi-millionaire, ultra high net worth individual, then yeah, enjoy yourself and buy the $30 million mansion in Miami Beach, okay? If you're just getting started in real estate investing and you want to buy, a single family home to rent out, or a duplex or a triplex, then you need to really, really seriously consider the different flood zones down there. So do your diligence, look to buy in a flood zone X neighborhood, and don't buy in obvious flood zones, right? You just need to mitigate your risk. Hey, Dan Lee, what's up? This is Tom. Living on the coast isn't all that it's cracked up to be. Yeah, Mike MTL says rent is pretty cheap in Iowa. Jeff W277 says not much flood risk in Chicago. Hate comment talking about crime in 54321. Okay. Steph UH has got it. That's a great part of the state. Zozo Bob says the insurance industry reports as Nevada is the least disaster-prone state. Now, Zozo Bob, I went to Las Vegas. I was in Nevada multiple times. Look, everybody's different. I don't think I could ever live there because it's just way too hot and way too dry. I don't know. I kind of like it hot and humid. Who knows? All right, team. So this is a very critical piece of data that came out of the existing home sales report today. And I'd like to review it with you guys now, and that is the percentage of buyers who bought with all cash and the percentage of buyers who were first-time home buyers. So here's an interesting trend that I am tracking personally. But really quick, this is the Plaza Hotel. We have now reached the most eastern side of Central Park. If you walk straight up, right up here, this is Central Park East, or the Upper East Side of Manhattan. Very, very beautiful. This is the Plaza Hotel. You'll see the gorgeous chandeliers inside the main lobby. We've actually been inside here on the live stream multiple times, but I do not believe they allow filming in here anymore. But anyway, okay guys, all cash deals accounted for 29% of all transactions. That is actually up from about 28% in December. So up 1% on a month-over-month basis, and about 27% this time last year, right? So if you think about the percentage of existing homes that were bought with all cash in January of 2022, it was 27%, and now in January of 2023, the percentage of existing homes that were purchased with all cash actually went up to 29%. Now, this is actually an encouraging sign, in my opinion, for the health of the housing market. And I'll sort of explain why and give my thesis on this. And it goes all the way back to the specific catalyst that really set off the great financial crisis. Now, the reason, in my opinion, we had this massive financial crisis in 2008 was because of very lackadaisical and even derelict underwriting standards in the housing market, in the mortgage market, right? If chances are, if you went to, man, this is a gorgeous view, my God, this is 432 Park Avenue, and then right here is the Trump Tower. I think Donald Trump still actually has his personal home there. Anyway, we'll talk more about that later. But if you look at the main thing that really set off the 2008 financial crisis, it was people who could not really afford to buy homes. They were getting approved for mortgages. And those mortgages, a lot of them, not all of them, but most of them came with adjustable rates, right? So not only was it horrible that these people really weren't qualified to be purchasing these homes, but their mortgages came with an adjustable rate. So as interest rates started to go up, Well, the payments on their monthly mortgage started to go up and they couldn't afford it. So this led to a wave of delinquencies, then defaults, then foreclosures. And what were we talking about just a couple seconds ago? You guessed it, a wave of supply coming onto the market, destroying the price, tons of distressed properties on the market. That is why I say, as we see the percentage of existing home sales that are purchased with cash go up, well, it's kind of hard to default on your mortgage if you don't have one, right? So I think what we're seeing this cycle is more qualified buyers, more competent buyers, and from a regulatory standpoint, you're actually not allowed to write some of these mortgages to people who don't meet those specific qualifications. So I think the underwriting standards this time around are a little bit more robust, which is good news. Team, this is the outside of the Plaza Hotel. Absolutely gorgeous building. Hey, Dan Lee is here. Says I sold an inherited property to an old lady who had a truckload of cash, says Dan Lee. Nina says, Tom, 2006 to 2008, huge business in giving. Adjustable interest rates, real estate brokers made huge money. That is correct. And I also think there was some nefarious activity going on there, but maybe we'll save that from another stream. Keith says, Tom, most Americans cannot afford cash for a house. 29% paying cash is more than I would have guessed. I think Keith makes a good point. It's more than I would have guessed too. Now, here's where we do have to have a little bit of concern, okay? Now, as you know, all of the statistics show that if you want to build wealth, and this is on a general basis, guys, if you want to build wealth in the United States, the vast majority of people, or first-generation millionaires in America, made their million by having equity in their home. Okay, so that would imply first-generation millionaire. They didn't inherit any money from their family members. They didn't inherit money from mommy and daddy. You get the picture, right? Now, the percentage of first-time home buyers in January of 2023 was 31%. So 31% of all sales in January were first-time home buyers. That's actually up from 27% in January of 2022. So we are actually improving a little bit, but here's the bad news, okay? I gotta give you guys the bad news. I gotta be fair. Think back to November. Does anybody remember our existing home sales live stream in November of 2022? Well, I do, because in November of 2022, it was the lowest ever recorded reading for the percentage of first-time home buyers in the existing home sales report, and that was 26%. So if you think about the durability and the health of the middle class, if we want to have class mobility in the United States, which is technically what the American dream's all about, right? Is coming to the United States and being able to work hard, being able to have a good job, buy a home, build equity, and pass that equity in that home down generation to generation to build a significant net worth. But if we continuously see the percentage of existing home sales, right, of the existing home sales go to investors and not first-time home buyers, well, what is that going to say for the overall health of the middle class 10, 20 years down the line, right? It's not good news. We want to have the average American to be able to buy a home, to afford a home, to build equity, so they can build a net worth and maybe even pass it down to their kids through generation to generation. Now, I want to ask the chat, selfishly here, and we're going to walk down Fifth Avenue. I'll give you one more shot at Billionaires Row. But I want to ask you guys, give us some feedback in the chat. Maybe, you have kids, or maybe you are a first-time home buyer. Maybe you have grandkids. Do you see in your own personal life today, I would say people between 20 and 35 years old, do you still see people in your family renting? Do you still see people in your family, priced out of the market? What is the overall sentiment in the chat? I'd be interested to know. Maybe we'll get some interesting answers. Yo, Brad's brain. What's up, man? This is exactly Tom. This is, man, the chat is moving a mile a minute tonight. I could barely keep up. Let me try to scroll back to the comment. Brad's Brains is exactly Tom. This is what I mean when I say you have to dig deeper into all the cash buyer number. That's true. That's true. Good to see you, Brad's Brain. Joan K, what's up? Good to see you. Valor Rabbits is trying to own and hold on to our homes as we speak. I see Robert is here. What's up, Robert? Thanks for joining us. Will M says, I don't think that's what the big guys want. Maybe. Ed T says the crash talks are coming back. So the real estate crash talks are coming back, you're saying? Hawaii is here. Welcome. Julie M says maybe they're putting that money into equities instead. That's actually possible. So maybe that they think that home ownership is so unattainable that they're just going to pile into equities. It's actually a pretty good point. Will M says the cash buyer number could be big corporate buyers lapping them. Yeah, you're right. You're right. That's actually a pretty good possibility. Hey, Ryan Beck is here. Says, hey, everybody. Hope you all survived the bloodbath in the market today. Yeah, stocks got clocked. Bond yields. I mean, I think the most of the turmoil today, to Ryan's point, was in the bond market. Crazy action in the bond market. That is not healthy action, what we're seeing. We're actually going to talk about that in a minute. Hey, Robert Parker says, hey, Tom, it seems like yesterday I saw you in Miami. You probably did. I was in Miami yesterday. Now, Robert, I decided to fly out of Fort Lauderdale. So I actually caught a flight. I think I left at like 9 o'clock. I got to New York just before midnight. Had a pretty good flight. You know, no problems, but thank you for joining tonight. DWG says, Tom, if the watch you have is an automatic, wind it once a month. Okay. Will M says, I guess I should have saved that for the private chat, says Will M. CM says, I didn't see anything wrong with renting mostly in cities where it is very expensive to own. Yeah, there's nothing wrong with it. I think a lot of people get confused, and you make a really good point. This is right outside of Trump Tower, by the way. And renting is actually a very fiscally responsible and good move depending on the situation that you're in, right? Because especially when you're early on in your career, everybody, right? If you're early on in your career, you're just moving to a big city, the main thing that you want is mobility, okay? You don't want to be tied down anywhere when you're just starting out your career, because maybe you have an amazing job opportunity in LA, and then you have to pick up and move to LA. If you bought something, well, you can't really do that. I mean, you could, but it's going to be a little bit more cumbersome. So what I would do, right, is for your first 5 years when you're really trying to build a career, rent. Renting is not just throwing money down the drain. It's not. Depending on where you are in your life cycle, it's actually very advantageous. It gives you mobility. There's no risk. Your risk is literally zero. So you could take huge, big, concentrated bets, maybe building a business, or maybe even, you know, if you're trying to run a fund, I would do that. I think it's actually a really good point. Peter is here. What's up, Peter? Good to see you. Thanks for joining us tonight. Lost in the Curves is probably a lot of mommy and daddies paying cash for homes for their kids. Nothing wrong with that, but rich boomers are fueling some of the cash purchases. That is a good, interesting thought, actually. That's really interesting. Now, I agree with you that if that's happening, I really don't view that as a negative, as long as you're doing the right thing and teaching your kids to be thankful and appreciative. Because let me tell you guys, I mean, unfortunately, I wasn't fortunate enough for, you know, my parents to buy me homes, right? I don't come from a rich background at all, quite the contrary. But look, when I make it big, or if I make it big, or I have a substantial net worth, I'm going to help my kids out, okay? I'm going to help my kids out. So as long as I instill the appropriate values of giving thanks, being thankful for what you have, understanding that, look, you're privileged because your parents are very successful. So, don't act like a spoiled brat and appreciate the home or the apartment. I don't find anything wrong with that, as long as you're teaching the appropriate values in your children. That's a good point, Lost in the Curve. It could be, maybe somebody in the chat could look that up for us. Is that even possible to look up? What percentage would you guys say of down payments are actually made up from funds from parents or relatives? I think it may be quite high, actually, now that I'm thinking about it. All right, team, here we are, East 56th Street, Madison Avenue. Gorgeous knockout view of the beautiful One Vanderbilt building lit up in all blue. And I'm going to take you guys right down here to the very front of 432 Park Avenue. And as you can see, the NASDAQ was down 294 points today. All the equity indices, NASDAQ, Dow Jones Industrial Average, S&P 500 getting clocked. Obviously, bond yields up, dollar up, oil down. Very volatile day. Hey, Haas Manning is here. Says, I agree 100%. Set your children up. Each generation should do a bit better than the one before, says Haas. I agree with you. As long as you don't spoil your kids and, they're not brats, you should teach them, hey, look, man, a lot of people, don't necessarily come up with a silver spoon in their mouth. So, you got to be appreciative for what you have. Hey, 45 says you can just look at the data that shows which generation owns their home outright. That would be boomers. That's a good point. Most likely. Yeah, and I think, here in the United States, I would like to know what percentage of first-time home buyers are getting down payment assistance from friends and family. And I'm not saying there's anything wrong with that, right? I would, assuming I have kids in my life, I would help them out. I would do anything for my kids. So, but I think what we're trying to say as a chat, and here's 432 Park Avenue, is that home ownership is becoming very, very expensive and almost unattainable for the middle class. And that has been my main concern because of what we just got through describing, is that, if you look at all of the data, it shows that the vast majority of first generation millionaires in America, the way that they get there is through home ownership and building equity in your primary residence. That's just what the data shows. So what does that mean for the health and the durability of the American middle class if less and less people have the ability to own a home because prices are so high? Now, they may be building wealth through other things, right? Through investing in equities, maybe even investing in their own business. It's possible, but all the data and the statistics show that, real estate is a big part of that as you build equity in that primary residence. C. Wills, 27. Says, Shaq, I'm not giving my kids nothing. Oh yeah, I think he did say that. Nina says, less than 20% helping in education is a helping hand. Middle class is nearly gone, if not extinct. Well, we could thank the Federal Reserve for that. All right, team, moving right along here. This is Park Avenue. Now, for those of you who are new to Walks on Wall Street and maybe new to New York City, this technically is Wall Street in my opinion, okay? Now you may be thinking to yourself, wait, but Tom, Wall Street is in Lower Manhattan. Isn't that where all the stuff, the big finance, all the hedge funds, the investment banks, aren't they all down there? Well, maybe at one point, but not anymore. Now that we have electronic trading, algorithmic trading, much of the trading activity in many of the major investment banks, family offices, hedge funds are now located right here on Park Avenue. If you look at this building right here, this is 425 Park. This is the newest addition to Park Avenue, and we have a very major heavy hitter, market maker, algorithmic trader called Citadel Securities. I think they have about 500 employees in this building right now. They're thinking about going to 1,000 by next year, and they just moved their global headquarters down to Southern Florida in Miami at the 200 Southeast Financial Center, where we do many of our live streams. So when you think New York City, when you think the financial capital of the world, make sure you think Park Avenue. This is where the vast majority of the financial activity happens. You know, we think about the New York Stock Exchange, which is right on the corner of Wall Street and Broad Street, but not a lot of trading activity happens down there. You know, it's pretty much just a historical site where they film CNBC. And that's not necessarily a bad thing, but technology has sort of created this flight to Midtown, if you will. If you think about, you know, Morgan Stanley, they're right in Times Square. If you think about Barclays Investment Bank, they are on the northernmost tip of Times Square. Oh, guys, look at this. So this is the Ferrari. I don't really want to call it a dealership. I think it's more of a showroom. But it looks to be a major event going on here. Maybe a networking event, or maybe they're showcasing a new vehicle. This is pretty cool. It's on the corner of East 55th Street, right here off Park Avenue. Hey, Dan Zhang says the headquarters of New York Life and MetLife Insurance is also on Park Avenue. Yeah, you're right. You're 100% correct. Truth Hurts is here. Welcome. Felipe says, greetings, Tom, from Brazil. Brad's Brain says, inheritance versus gifts is something to consider. 2 people close to me have lost both parents recently, and the estate dealings are nightmares. I can imagine. I'm sorry to hear about that, Brad, by the way, man. I've gone through something, not to that event, but something similar, and it is a nightmare in hell, for sure. And that's why it's important that, in my opinion, and again, this is just my view, once you cross that 2 million net worth mark, I would, look for some like estate planning. And I know many people may say that it's a little bit too early, but you never know in life. So I think you should get a good CPA, and I think you should, get your ducks in a row there. Hey, Michael Joseph says, unfortunately, the new inheritance tax changes got the government talking a lot in some states. Hopefully they're not going to raise the inheritance tax. We'll see. Now, let's quickly review the bond market, everybody, because obviously today, the main topic for this live stream is the National Association of Realtors existing home sales. Okay, we covered this in depth already. 12 consecutive months of existing home sales declines. Now, in summary, to generalize, I'd say the main 2 takeaways from the report is that we're starting to get a little bit more inventory come onto the market, which is good news if you are a first-time home buyer and you're expecting prices to decline. Because simple supply and demand metrics here, the more supply that's on the market, price pressures are probably going to ease a little bit. So that's number 1. Number 2 is that we're not really seeing cataclysmic events starting to unfold, right? The percentage of existing home sales in January that were distressed sales are 1%, right? All cash deals are 29%. So you're not really seeing people who can't afford to buy homes, is what I'm saying. But let's talk about the equity market a little bit. But before we do that, if you guys are enjoying tonight's live stream, this is City National Bank right here. Feel free to leave a like on the video. Hit the subscribe button if you're new. Share the show with your friends. We do these live streams about 5 days per week between New York City and Miami, and we would love to have you guys here along for the ride. Now, let's talk about the equity market today. So markets got rocked, but as you guys know, if you've been watching the stream, What's more important than the actual movements in the stock market is the health of the debt market, the bond market, okay? And today was very, very concerning action in the bond market. We had bonds sell off extremely hard on pretty big volume, and that forced yields to spike. So yields across almost the entire yield curve went skyward. If you look at that 10-year US Treasury yield, we are now knocking on the door yet again of a 4% 10-year US Treasury yield. It was 3.947% today. But what's even more important about that, or in addition to that, is the junk bond market. Now, did anybody see the action today in junk bonds? Now, if you want now I think everybody was talking about BlackRock today. This is BlackRock right in this building with all the scaffolding over it. So there you go, BlackRock right here. This is my favorite building in all of New York City, the Seagram building on the corner of East 53rd and Park Avenue. Now, if you want to track the junk bond market, here's what I would recommend. If you look at ticker symbol JNK, that is the Bloomberg High Yield Bond ETF. And that sold off 2%. Those are major movements in the bond market. We are now trading below 90. And the reason why I'm so fixated oftentimes on the junk bond market is because it really gauges risk appetite in the market, right? If the market is buying up junk bonds, well, what I like to call animal spirits are coming out. People have more of an appetite for risk. So if you think about how bonds are priced, we've reviewed this multiple times, there's essentially two sections of the bond market, right? You have your sovereign bonds or your government bonds, which are US Treasuries. We always focus on the benchmark, which is that 10-year US Treasury yield. However, there's also the corporate debt market, right? So if you think about Treasuries, essentially what a US Treasury is, it's a way for the government to raise money to finance the United States government, right? So the government is going to sell bonds to institutions, people like me and you, large investment banks, foreign investors, and they use those proceeds to pay the bills, right? To keep the lights on. Same concept in the corporate market, right? Depending on the company, they will issue bonds to raise money and they will pay a coupon. Now, there's multiple ratings agencies that give these bonds appropriate ratings based upon their credit worthiness, okay? Based upon their credit worthiness. And these bonds will trade via spreads, or they're priced via spreads over the benchmark. Oh, look at this dog coming up. Wow, it's almost like a bear. Anyway, so they're priced via spreads over the benchmark. So if you think about a company who is in really, really bad financial stress, financial strain, chances are the ratings agencies are going to give that bond a rating of a junk, right? Maybe C, triple C, and the like, and that is going to have a very, very high yield or a very large spread over the benchmark, right? So think about a company like Apple. Credit worthiness is fantastic. Company is rock solid. The bonds are probably not going to pay or have much yield, but if you look at the junk bonds, these could be yielding double digits, right? So very risky, sort of like a higher risk, higher reward. But if I'm going to lend a company money that may go out of business, I'm going to demand higher yield. Look at the architecture on this church, by the way. This is right outside Blackstone. Hey, Ed T, what's up, man? Good to see you. Thanks so much for being here. Photos from around New York. Welcome back to New York City. Thank you so much. Mike C says, after 2008, I have little trust from the bond rating agencies. That's actually a really good point. So for those of you who don't know, Mike C brings up a really good point. So if anybody's seen the movie The Big Short, I'd watch it, but I actually like the books a lot better. Essentially, it's pay to play, right? We can't say that. So allegedly, we don't want to get sued. But yeah, let's just say there's some greasing of palms going on where, you give us a good credit rating and, we'll do business with your ratings agency. It's a good point. Hey, sunshine after rain. Good to see you. Welcome. Thanks for joining us. Robert Parker says, I know you probably don't want to talk politics, but sadly the Democrats are aiming to tax the very rich. Yeah, let's just chill on the politics a little bit because people just get riled up. And it also puts a shadow ban on the channel. So if you like Walks on Wall Street and you want it to grow and you want other people to see it, let's just keep the comments. Let's just chill out. Let's not, get too crazy. Maybe we could have those conversations on a different platform. But as you guys know, YouTube does not like that type of talk. It's not me, but Oscar Diaz is Mr. Tom. How are you? What on earth happened in the markets today? Well, the bond market's deteriorating and falling apart, right? We sort of explained, I always say, if you want to know where the stock market is going to go, don't look at the stock market, look at the bond market, because the stock market derives its value from the debt market, right? And many people in the chat, and they're right, by the way, have said we are in the biggest debt bubble the world has ever seen. And it just depends on how long we could, the Federal Reserve, I'm saying we, I mean the Federal Reserve, can keep the balls in the air and manage this debt, right? Because if we have an uncontrolled sell-off in the debt market, essentially what's going to happen is yields are going to spike, and you're just going to have cash moving from one asset class to another. They're going to get sucked out of equities, and they're probably going to go into precious metals, commodities, and maybe even Bitcoin. But when is the day of reckoning? I don't know. Do I think one day in the market makes the market? I don't. Do I still think we're in a little bit of a bearish trend here? Probably. And I also think the market is spooked due to what Jim Bullard said last week. And the futures market is starting to agree with what Jim Bullard actually said. And for those of you who don't know, Jim Bullard is one of the Federal Reserve presidents. And he said that we're probably going to get another 50 basis point rate hike at the March FOMC meeting. And futures markets are pricing in about a 24% probability of that. So, hey, Peace Frog says, until you're deep in a recession and the high quality debt is money. This is Peace Frog. Peter, we understand your comment, but we don't want to get banned, so just chill out. Black Beauty Machine says 3 weeks of sideways chop. Possible. All right, so speaking of Wall Street, if you guys look directly ahead of you, this is the construction site for 270 Park Avenue. And 270 Park is going to be the brand new building for JP Morgan Chase. This is going to be Jamie Dimon's brand new office tower. This is going to be an unbelievable addition to Park Avenue. It's just going to be absolutely gorgeous to see the New York City skyline evolve over time. Now, when we were in Miami, we were sort of saying the same thing, right, about Miami. We are going to have the Aston Martin building, we're going to have the Waldorf Astoria, we're going to have one Bayfront Marketplace, or one Bayside, or Bayfront Marketplace, right? What is that site called? It's right next to the 200 Southeast Financial Center. Bayfront Plaza, that's what it is. And then you're going to have one Brickell City Center. So as we do these streams, it's going to be awesome to see in real time the construction workers building a brand new New York City and Miami skyline. It's going to be amazing. You could actually see one of the iron workers welding one of the steel I-beams right now. Hey, Chris, this is Tom. I think the Federal Reserve is going to raise interest rates until it hurts, then lower it super fast. I have a feeling about that. It's definitely an interesting supposition. I don't think they're going to do that, but you may be right. And I like that point. Now, here's what I think the Federal Reserve is going to do. And the only reason why I think this, everybody, is because of some comments that Federal Reserve President, Minneapolis Fed President Neil Kashkari said. And he said that we're probably going to have to raise interest rates, or the Fed funds rate, to above 5% and keep it there or hold it there for a prolonged period of time. And I think if that happens, that's going to throw a big curveball in the way a lot of people do business. Because to your point, I think a lot of people are expecting the Federal Reserve just to raise rates all the way to, maybe 6 or 6.5, and then just start cutting all the way back down to 2%. I don't think they'll do that. I don't. However, we may get an even better look at what the Fed may do on Friday, okay? Because Friday we are actually going to get some more inflation data, and that is the Federal Reserve's most preferred inflation report is actually going to come out on Friday. So our Friday night stream will be solely dedicated to that. Hey, Gary Carpenter, what's up? Good to see you, my friend. Joseph Hardaway says, Tom, a lot of people are getting jobs and ran out of stimulus money they had saved up, which is good for the Fed and CPI. Perhaps. Michael Joseph says, yeah, Home Depot earnings and guidance creating more recession talk. Michael Joseph, I was so busy today, I didn't even get a chance to take a look at how Home Depot and Walmart reported, unfortunately. But, the only thing that I did get to pay attention to was Palo Alto Networks. So as we know, we did the Market to Look Ahead live stream on Sunday. This is a big week on Wall Street, folks. Not only do we have the existing home sales data today, we got the S&P Global PMI numbers, and it's a huge week for corporate earnings. We had Home Depot, we had Walmart, and we also had one of the leaders in cybersecurity, Palo Alto Networks, ticker symbol PANW. And we predicted that they were going to beat, and they were going to beat big, because cybersecurity is one of the only, I would say, software categories, so to speak, that businesses and consumers cannot afford to cut that spending. They could afford to cut spending on CRM tools, they could afford to cut spending on prospecting SaaS software, but it is not possible to cut spending on cybersecurity infrastructure, because God forbid there's a breach or there's a cyber attack and you get hit with ransomware. That could mean life or death for your business. So Palo Alto Networks on a big earnings beating on both the top and the bottom line. Stock is up 9% after hours. Now, watch this, because tomorrow it may fade big time at the open. So I think pre-market is going to be crazy for Palo Alto, but right at the open at 8:30, watch the volume there, and if this thing starts to fade, which I think it probably will, just based upon the overall general trend of the market, but I think long term, you guys know my opinion, just based upon my experience being in tech sales, Palo Alto Networks is the leader in cyber, bar none. Yeah, Ed T says Palo Alto Networks is the only bright spot in my portfolio. Now, we may do a deep dive into the report tomorrow. I was very busy today, guys, so I do apologize for that. But here's what I will say about Palo Alto Networks, and I'll provide you some insight here. Here's what I like. And if you think about, well, let's quickly take a step back and talk about a sales organization. Okay? So in a sales organization, you could sell business to business, in SMB, which stands for small to medium-sized business. You could sell into mid-market, or you could sell into enterprise, also strategic, which are very big accounts. And then you have SLED. So SLED stands for state, local government, and education, which, by the way, anybody who was selling software or selling technology during the pandemic and they were a SLED representative, you made a fortune. But that will be a topic for another night. We probably actually covered that already. But Palo Alto Networks, the reason why I like them, and all of my customers, when I used to sell into the Fortune 500, Global 2000, all of them are Palo Alto Networks shops. And what that means is Palo Alto has a very high penetration rate into enterprise customers. So you think about the percentage of the Fortune 500 that are Palo Alto customers, it is very, very high. And quarter over quarter, large customers continue to add on different products from Palo Alto Networks. And what this is called, there's an industry terminology about this. It's called landing and expanding. So you'll have your enterprise account executives. Really quick, this is the Yale Club in Manhattan. It's on Vanderbilt Avenue, right across the street from Grand Central Terminal. But you'll have your enterprise account executives, which they are in charge of hunting for new business. So oftentimes they'll call them headhunters. So they're actively calling and prospecting into Fortune 500, Fortune 50, Global 2000 customers. They close the deal. Once the deal is closed, then that goes over to inside sales, right? Where you've landed the customer and then you expand that customer and sell them additional products and services. And Palo Alto Networks is great in doing that, by the way. So just based upon my research and my industry experience, by far, not even a question, Palo Alto is the leader in cyber security. Hey, Teresa Diaz is here. What's up? Good to see you. Thanks so much for being here. TD is in the chat. As always, the LT Prods, as I thought Palo Alto Networks would be a good report, but it was not that good. They guided iffy, but everybody's guiding iffy. Julie Ems is... Oh, yeah. Well, I mean, look, it's good to manage your risk. Michael Joseph says Walmart was also up, people reshuffling to safer inflation-proof companies. Now, I'm curious if anybody was on the call today for Walmart. And here's the because I wasn't. I was too busy. I'll probably listen to it on my train ride back home. But I have a question for the chat. Maybe you guys could answer it for me. Now, here's what I always look for, especially in these times of inflationary pressure and now that many economists are calling for a recession. Look at the percentage of sales from Walmart that are on store-branded products. And we could use this as a proxy to the health of the American consumer to see if people are cutting back on name brands and buying the generic store brand. And many people and many investors may think that would be a negative sign, but it's actually technically not, in a way, as it relates to Walmart, because, you know, many people don't know this, but the store branded products at Walmart actually have higher gross margin. There's way more margin in selling store branded products at Walmart than it is to sell, you know, the General Mills and things like that. So any insight on that? Maybe Mike C or anybody who was on the call, if there's any analysts in the chat that were covering Walmart today. Anyway, team, we made it. This is Grand Central Terminal. It's looking absolutely gorgeous tonight. And here's one of my favorite Art Deco buildings in the world. You guessed it, this is the Chrysler Building. Looks beautiful. Photos from around New York says Walmart reported that people are not spending as much on discretionary items. Oscar Diaz says Walmart belt tightening, question mark. Oh my God, yeah, Brad's brain says, Tom, Yale Club always reminds me of Trading Places. Tom, you have 10 months to watch it before next Christmas. Dude, it's on my to-do list and I gotta watch it. I've been slacking. I mean, look, I'm not a big movie guy, but I promised Brad I'd watch it, and I'm going to watch it. Let's actually go in Grand Central Station because I'm freezing, and it's not even cold out, but I'm starting to turn into a Miamian. And if it's not 85 degrees and sunny, I start to get a little shiver, so. Hey, Sally's here. What's up, Sally? Good to see you, my friend. Brad's brain says Walmart and Home Depot both guided lower. So I think we're going to start to see a lot of companies guide lower, but that is actually may set the precipice for future earnings beats. Companies tend to do that. Little secret here. Generally speaking, they tend to, well, not guide low. Their projections tend to be conservative, so they could, beat expectations. Also, think about an analyst, right? Let's say if you work at an investment bank or a financial institution and you're covering Walmart stock. Now, you want to keep your job, right? So you're going to be conservative on your estimates. You're not going to send out to your clients really, really aggressive earnings estimates, especially in a bear market. So, if you were an analyst at an investment bank and you want to keep your job, would you rather, put out or just guide down or start to revise down those earnings estimates? And then if they come in better than expected, clients are like, oh, okay, better than expected. But what if you put out very, very, let's use the term hopium as it relates to earnings estimates, and then a company misses? Well, your clients are not going to be too happy with you, and neither is your boss. So just keep that in mind too.
Attention customers, for your safety, the safety of others.
Hey, Gopal says, hey Tom, how are you? I'm doing really good. Thank you for joining us tonight.
Thank you.
We are here reporting live from Grand Central Station. Looks beautiful here. I'll give you guys a look at the ceiling. Yeah, Ed T says you have to be really confident to guide high. Mike C is like hopium. I've never heard that term before. It's great. Now, I don't think you could get a train station in the entire United States that is as gorgeous as Grand Central, and I think many of you in the chat would agree with that. Now, here's the good news. You guys want to know some good news? We've been talking a little bit doom and gloom tonight, but look, we got to be a realist about the market. I got to spit it to you guys straight. The East Side Access Project is alive and well, team, so if you're a Long Islander like myself, you could now take the Long Island Railroad to the gorgeous Grand Central Station. It only took $10 billion in a decade, but we got it done here. It's the New York way. But it is gorgeous nonetheless. Maybe one day we'll have to stream it. We'll see. All right, let me give you another shot from the back. Hey, Nakos is here. So soon Tom will be saying 65 degrees is chilly. I know, dude. I'm really cold tonight, actually. Love the American flag in the background. Hey, Canard Bars is 100 out of 100, Tom. Grand Central Station, love it. Good to see you, Canard Bar. Jafet Perez is the Vanderbilt, used to own Grand Central Terminal. Now, I'll give you guys a quick tip because we do have a lot of new people that are subscribed to the channel. If you come to Grand Central Station, okay, there's an absolutely gorgeous bar. It's called the Campbell Apartment. You go up the stairs to the left and up the additional stairs. It's right here. It's a gorgeous place. I know a lot of people, travel for business to New York, so if you're looking for a good place to take clients, it's a pretty good place. If you want to see what it looks like, just go on Google Images and you guys will not be disappointed. I think it's one of the best hidden gems in New York is the Campbell Apartment. Now, if you direct your attention all the way to the top right, you'll see that little teeny black spot on the ceiling. That is actually what the ceiling used to look like before they cleaned it up. Think about all of the people who have walked through this station smoking cigarettes, smoking cigars, and all of that tar has to go somewhere. Well, it ends up on the ceiling. So as a way to remember what it used to look like, they left that little square of black tar on the ceiling, just to give you a crazy idea of how well the air quality was back in the day. Now, one of the reasons why I like Grand Central Station better than Penn Station, and that's not being biased, by the way, because I pretty much live in Penn Station, as you guys know, but for whatever reason, they keep Grand Central Terminal really, really clean. I don't know how they do it, because you can't really say the same thing about Penn Station, but Grand Central Station is always clean every time I come in here. You know what I think we forgot today, everybody? Or maybe we did cover it, I'm just forgetting about it. Did we cover what the average or the median sales price was for January for existing homes? I don't think we did. I think we were just talking about the specific metrics. I think that'll be fun to guess in the chat. Does anybody want to guess what the median sales price was for an existing home in January? Anybody want to guess the price? I think you guys are going to be a little bit surprised, but the median sales price, any guesses? Fuzzy Dice is 400K? Close. Hold on, let me head outside. I got to zip in my jacket. Let me try to zip in my jacket with the phone in my hand. Zozo Bob's is 475, DM's is 350. Ooh, DM is almost on the money. Ken Brockton's is 450. I think DM had the closest. Let me see. Ooh, Shatoya Davis 375, close. Well, I'll tell you guys, DM had the closest, but the median existing home sales price, it increased 1.3% year over year to $359,000. So even though we're seeing home sales decline as it relates to transaction volume, on a year over year basis, prices are still up about 2%. It's pretty expensive. $359,000. Valor Rabbit says your voice is calm and soothing. I appreciate that compliment. Thank you for being so kind. So DM gets the trophy. Congratulations. It's a good guess. Good guess. All right, crossing Madison Avenue, guys. We got to go visit our friend Mark Benioff, who is the CEO of Salesforce. There it is, Salesforce Tower right here, ticker symbol CRM. I think that is going to be one of the major software products that many organizations start to cut as many organizations look to trim the fat, if you will. Now, if you think about Twitter, did anybody see this news? We may or may not have talked about it, but Elon Musk, everybody knows, owns Twitter now. And allegedly, I don't know if it's true, I saw it on Twitter, so you never know what is true or what's fake news anywhere. But supposedly, Twitter had $1 million ARR, which is annual reoccurring revenue bill, to Salesforce. And what in the world they were using that much CRM for, I have no idea. But they cut it. So if Elon Musk and Twitter accounts for about $1 million worth of churn, you don't think all these other companies are trying to do the same thing in reducing costs, trimming the fat, increasing operational efficiencies? We'll see. Hey, Flat Smack is here. Good to see you. Melissa 2087 says 45 degrees out. Now, if you look across the street, this is 5th Avenue, 42nd Street. This is the beautiful New York Public Library, or the Stephen Schwarzman building. Now, we have some news coming out of Blackstone and Stephen Schwarzman. And it is in relation to big multifamily real estate properties. And as we know, here you can see the very top of the Empire State Building. Now, we spent the last hour and a half talking about existing home sales, right, which is like single family. But if you think about multifamily, right, and big commercial multifamily properties, you're talking about, 250 units or more. These properties, not all the time, but the majority of the time are acquired with floating rate debt, okay? Floating rate debt. And I think we're going to see some, I want to be very appropriate with my word choice here. Give me a minute. I don't want to spook anybody. I think we're going to see a little bit of turmoil, a little bit of turbulence. All right, let's substitute turmoil with turbulence. I think that's a better word. In the multifamily real estate market, with investors who have purchased a property over the last 12 to 24 months, because chances are their rates are readjusting and they're probably going to be paying significantly more on their monthly payments as those yields go up. So take a look. If you just type in Stephen Schwarzman real estate, you'll probably see the article about it. Yeah, or bumpy ride. Hey dude, this is my current company spends over $5 million on SFDC ecosystem, or Salesforce.com ecosystem all inclusive. At my previous company, we spent a similar amount, and it's difficult to switch without incurring significant professional service and cost disruptions, says Duda. That's a very good point. But sometimes if you do like the cost benefit analysis, so a company like Twitter, right? Why would you use a CRM at Twitter? For the advertising salespeople? Like, how many advertising salespeople do you need at Twitter, right? You probably don't need a huge amount in CRM spend. I always recommend a company called Zoho, Zoho. I think it gets the job done. It's not a premium product, but it gets the job done. Not a big fan of HubSpot, but if I had to advise on a particular CRM for like a mid-sized company, I would just say use Zoho. I think it'll get the job done for you. All right, one more shot, team, of the New York Public Library. I know Hawaii is like, Tom, you brought some nice weather from Miami to New York City. I'm trying my best for sure. Hey, Valerie Rogers, as the market is falling is what you mean? Everything will come tumbling down like Humpty Dumpty? Maybe. Jamie C4123 says, hey, back in New York. Good to see you, Tom. I'm just chilling here in Arizona. Welcome. We are here on 5th Avenue. Now we're going to continue to walk down 5th because I want to see the Empire State Building. The first day back in New York, I mean, if we don't see the Empire State Building, that's just craziness. Hey, Keith says, I used Zoho for a while for personal work. Copy that. Blues Writer says, Tom, how do you keep your sinuses from blowing up when traveling back and forth from hot to cold climates? I always get horrible colds. Well, it's a good point. I tend to eat healthy, right? I usually really don't eat junk food, but Blues Writer, a couple weeks ago, I was freaking hammered. Not with alcohol, but with a nasty sinus infection. So much so that I actually had to go to the doctor and get antibiotics. But here's the crazy thing. Oh, this is the newer New York Public Library. Quick tip for everybody. I know we have a lot of finance people in the chat. Go to the 5th floor. It is the International Business Center. and you could use the Bloomberg terminals for free. Maybe you'll run into me up there. Just say hello. But anyway, here's the crazy thing, right? And very seldom do I get sick. I had the sinus infection, but the crazy thing is I really didn't feel sick. I didn't feel sick. The only reason why I had to go to the doctor and get medicine is because my voice was totally shot. It was gone. Nothing I could do would bring my voice back. It was just gone. And this was so persistent for 2 weeks that I'm like, you know what? I'm going to bite the bullet. I'm going to go to the doctor. I went to the doctor in Southern Florida, Miami Beach, and she's like, you know what? You're the 5th person this week that I've seen from New York that has a sinus infection. Maybe something was going around the city, who knows, but thank God I'm all better now. I was on like a 2-week prescription of antibiotics. They also put me on this nasal steroid. But hey, man, I'm not immune to it. Hey, Jackie is here. Does any CRM can sync with TikTok? What? Many advertisements rely on TikTok nowadays, unfortunately. You actually make a good point. I don't know. Now, most CRMs have pretty good API integration to things for obvious reasons because, if you're running a CRM and you're really serious about growing top line revenue at your company, you're probably going to have at least 1 or 2 other SaaS products, right? Whether that be Zoom Info, it's actually a publicly traded company, by the way, ticker symbol ZI for Zoom Info. It was founded by Henry Schuck. Formerly, the company was actually known as Discover.org. I'm not sure if anybody knows that, but anyway, I'll digress. You have to have all of these different SaaS tools integrate seamlessly to your CRM. And that is why Salesforce has really been the main leader, because they had a first mover advantage into the market. But look, Zoho is just fine. I think Zoho is fine. It integrates with Zoom Info, it integrates with Slack, really anything you need. But that's new. I never heard about integrations with TikTok. I will admit that's news to me. All right, guys, we got to do it. We're back in New York. You know what I'm going to say. You guys already know what I'm going to say before it even comes out of my mouth. What do we got? I'm going to give this view, what do you got? 9.6? 9.6 out of 10? What do you guys think? I think this is a 9.6. This is a pretty solid 9.6 out of 10. No way. Wobbies. This is Tom. Newsflash. The Campbell Apartments is closing for good. The last day is February 27th. No way. That has to be fake news, man. There's no way that the Campbell is closing for good. I can't allow that to happen, man. I can't allow that. Oh my God. I may have to make a few phone calls, raise some money. Dr. Longus' 9.6 is accurate, yeah. Dude, if that's true, I may have to call around. I may have to call around, make some calls. I mean, that sucks, man, honestly, because it seems like these really, really classic New York institutions are all closing down. It seems like all of the original classic, old school New York institutions, unfortunately, are being forced to close due to rent, the high prices of rent. Now, I'm not sure what the issue is with the Campbell bar, but I would assume maybe it's due to the rent being so astronomical. Who knows? What really broke my heart, you guys want to know what literally put a knife in my heart and twisted it around was when the Carnegie Deli announced that they were going to close down. I mean, that is just a travesty. New York should have never allowed that to happen. I don't know. How many of you in the chat used to go to the Carnegie Deli all the time, or at least make a special trip when you would visit New York, maybe on a vacation, maybe on a business trip? That sucks, man. That really, really sucks. Yeah, Dustin says, I love that place. Now, if they close down Katz's Deli, I'm going to have to do something about that. Wow, Dan Zhang says, Tom, my friend is a consultant, actually, who is consulting for Pret a Manger. He told me they were also in some financial trouble. Wow. I would never think that, Dan, because every time I pass one of those Pret places, they're always packed. That's crazy. Oh, is that right? So Photos from Around New York says Katz's Deli owns that property. Well, that's good. Will M says, I went there once with my dad back in 2003. What a shame. Yeah, the Carnegie Deli, that is New York City right there, man. That is New York, bro. Yeah, Wabi says, Tom, I love the Carnegie Deli. And you know what's horrible? I'll tell you what's horrible. Listen to this. This is what's horrible. If you walk past where the old Carnegie Deli was, there's nothing in it. It's just a vacant spot. So it's not like they had to, kick him out so they could command higher rent from somebody else. The place is vacant. Anyway, so this is the Starbucks Reserve store, one of the Reserve roasteries. Starbucks trades under the ticker symbol SBUX. Now, we do have some breaking news out of Starbucks. They're announcing in one of their Italian restaurants, they are going to be trying out an olive oil infused coffee. Now, how many of you in the chat would ever drink an olive oil infused coffee? Dr. Longus says New York has gone through so many changes over the years. You're right, man. It's sad. Got the NYPD. I know, isn't that... Look at Michelle. Michelle's like, no way. Hilarious. Yeah, everybody's like, sounds nasty, right? Melissa's 2087 says, I'd try a sample. I tried to. Might as well. Now, I got to put a company on your guys' radar here. This is actually a stock I'm covering. I don't own the stock, but it's a stock I'm covering. It's Dutch Brothers Coffee. It trades under the ticker symbol BROS. And the growth trajectory seems very similar to that of Starbucks. Now, I've never been to a Dutch Brothers coffee shop, but maybe some of you in the chat have been and could provide some insight. But from the people that I know who live in Chicago, where there's multiple Dutch Brothers coffees, it seems to be pretty packed. I mean, similar to that of Starbucks. So, watching the company, I think they report earnings here soon. UnitJ23 says it's good. Lillis's Dutch Brothers coffee is awesome. Yeah, I mean, their revenue growth is staggering. Really, really good stuff. All right, we are now coming up on 34th Street, Herald Square. This is the main Macy's building. Hey, the LT Prods Bros is on my watch list for a while now. It's on mine too. Really good company. Now, speaking of fast casual, and we're going to talk about this later, because obviously today was very real estate focused. But I'm also watching Wingstop, okay? Also watching Wingstop because, well, I'm watching a couple companies in like the fast casual space that have higher than normal gross margins. So we'll do a deep dive into this, and maybe I'll share one of my models that I'm building with you guys, but check out the gross margins on Wingstop. And if you think about, let's just assume for a moment that all of these economists that are, clanging and banging on the table about a recession this, recession that, boom, boom, boom. All right, let's say if they're right, all right? Let's say if they're right. Usually in recessions, people gravitate towards something that's called an affordable luxury. One example of this would be beauty products or makeup. You look at a company like e.l.f. Beauty, trades under the ticker symbol ELF. You look at Ulta, UTLA, and some of the fast casual restaurants tend to perform quite well. One of which being like a Denny's, right? Others would be like a Wingstop. So maybe as a thesis to trade off of that, again, I'm not recommending to go long these stocks, just watch them, right? If you could have a chicken wing restaurant, look at this. Is that not funny? We were just talking about Ulta. There's a little Ulta box on the ground. Anyway, if you could have a chicken wing restaurant that is very popular, that has stellar gross margins, really, really solid margins, I don't know, it's one to watch. It's a chain business. I think it's majority of franchisee. I'm watching it. I'm watching that. Let's just say that. Also watching Celsius, which is, maybe I'll just preface our future live streams, but one of the things I like to do, and this is what Peter Lynch used to do. And for those of you who don't know, Peter Lynch was the former mutual fund manager at Fidelity Magellan Fund. He had about a 32% CAGR for, I think, over a decade that he was there. Now, I mean, having a plus 30% CAGR is just ridiculous. That is like God status in the investment business. But anyway, what he would try to do is look at model stocks and model companies and try to match up growth trajectories of similar businesses. So I'll give you an example, okay? And then I got to cut you guys loose because I got to head home. Check out a company called Monster, right? Monster Beverage. Now Monster Beverage has been one of the best performing stocks in American history, okay? Now, one of the things we could do is we could extrapolate their growth trends in Monster Beverage and try to project that forward on similar businesses. And what I'm trying to do right now is do that with a company called Celsius. And I don't drink these energy drinks, guys. I think you know that. But has anybody had one of these like seltzery energy drinks? It's called Celsius. I think the company is based out of Palm Beach. It's all the rave. It's all the craze. Now, it could just be a fad, right? It could be, people drink this for, a year and then they don't drink it anymore. Or it could have more staying power. It could be a little bit more sticky. It could be like Monster Beverage, where the stock has returned 67,000% since IPO. And yes, I wasn't misspeaking, 67,000%. But look, we'll talk about that more. We'll go into more of the fundamentals, but I don't know. Has anybody here ever drank Celsius? John says, I only drink Powerade. Oh my God. When's the last time I had a Powerade? I don't even remember. I'm kind of craving one now that you said that, John. All right, team, here we have it. 7th Avenue, Pennsylvania Station. Next stop, Long Island. All right, here is an amazing view of the gorgeous Macy's Herald Square. But here's something better, everybody. Look at that view of the Empire State Building there. I don't think you can get much better than that. Hey, Mohammed, what's up? Good to see you. Thanks for joining us. All right, guys, I got to end the live stream about 10 minutes early today, but I want to thank each and every one of you for coming out and supporting Walks on Wall Street. It really means a lot to me. You know, I really do put a lot of work into it to give you guys the most cutting edge market knowledge, and I appreciate that you guys hang out with me every night. It means a lot. So team, I will see you all tomorrow. Tomorrow's already Wednesday, halfway through the week already. We'll meet back here at 8:30 p.m. live from the Big Apple. If you're new here, please subscribe to the channel, share the show with your friends. Ooh, that guy's drunk. I gotta run. I gotta get the train. Sabrina Fair, Lena Sandoval, Silva, Hawaii, Hermes Addict, thank you so much. Travelnista, David S, DM, appreciate it. Mohammed, Sanjeev, Meld, LL, DWG, Zozo Bob, DWG again. Western Mass Dave, Infinite Sky, The Swan, thank you so much. Joan K, John Kelly, Disney Hatch, Disney cast member Abdullah, and to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. Dusty Cole, thank you so much. We'll see you guys tomorrow at 8:30. God bless.